Hello and welcome to Your Daily Five. I'm Greg Harmon, President and founder of Dragonfly Capital Management. At Dragonfly Capital, we send out a newsletter to subscribers every week, giving ideas to trade your own account using technical analysis to develop options trades, as well as earnings trades. The upcoming earnings season is about to happen in a couple of weeks. Maybe it's time to get ready for it. We also manage money in separate accounts for clients using these same strategies, but with a slightly longer term focus. More information at dragonflycap.com. Today, I want to talk about something that may be a little bit controversial, and that is playing defense in the retail space. Normally, we talk about playing defense when markets get into pullbacks by looking at sectors like utilities or consumer staples. And the historical perspective is, well, these are more stable stocks. These sectors don't take as much of a beating. So they're a good place to hold out if you're still holding stocks, if you can't just sell outright in downturns. But there's an interesting phenomenon going on currently in the retail space. And perhaps it's got to do with the opening up of the economy and the $1.9 trillion in stimulus that's being put into the space, leading to the opening up of pent-up demand for individuals to go out and actually go shopping, go and buy things, buy clothes, buy stuff that they haven't bought in years. We've seen retail stocks benefiting from this over the short run since the discussion of stimulus has come on. But today, I'm going to show you 5 stocks that I like that are actually holding up really well in this quick, short pullback that we're in so far. First one is PVH Corp. And you can see PVH Corp had a run up from November, from the election time up until January, and then had a slight pullback to its 50-day moving or 100-day moving average at the end of January, beginning of February. Since then, it's moved back up to the highs of December, of early January, and is holding firm. Less than 2%, 3% off of its all-time high. And if you look at this relative to what's been going on with the S&P 500 the last day or so, especially today, and the NASDAQ and the Russell 2000, this is a really strong showing. We're almost in a situation here where a move over that 108 area will give us a trigger for another relatively strong move higher from the 108 area up to something like around 120, 122, somewhere in that range, based on a measured move off of the bottom at the beginning of February. One thing to note is that there is potential risk there with the MACD starting to level. The second one I wanted to talk about, though, is Dick's Sporting Goods. And Dick's Sporting Goods also saw a run up in January to a high in the middle of February, pulled back to its 50-day moving average. Only a shallow decline to get back there. And you notice that the RSI stayed above the midline for the most part and is starting to roll back higher. The MACD crossed back up, never went negative. Very strong sign. And now price, in a market that's off today, is showing a move higher up to new all-time highs. Defensive stock, Dick's Sporting Goods, you wouldn't have thought of it. But with the Dow off 150 points as I'm speaking, making new all-time highs. The third one, Levi Strauss, the jeans makers, moved up off of a base in February. That base just below its 50-day moving average, and the launch point above that started a new trend higher. Ultimately ended up in a new all-time high at the beginning of the week, and has basically held firm during the entire time that we've seen this quick sell-off. Another thing to note here as well is that we've got a potential MACD cross down, or well, actually a MACD cross down. So we've got a potential that maybe this stalls out for a little bit. But from a defensive perspective, that's not so bad. The fourth stock, American Eagle Outfitters. When I looked at this chart, I didn't think I needed to even draw any lines on it. If you look at this, look at how the moving averages, the 50, 100, and 200-day moving average are all moving up parallel with price. There's no weakness in the trend here. The only thing you see here is the last 5 or 6 days, some stability in price as opposed to continuing to move up and up and up. And that's actually a good thing for this one. So this might be one to look at even beyond the defensive perspective, in that it's now through this consolidation, through this short-term sideways motion, moved into a spot where it's gotten a little bit tighter back to its 50-day moving average, which is a good thing for it. The last stock I wanted to talk about is Urban Outfitters. And Urban Outfitters is one that's been moving higher in steps, or let's say in cup and handles, since July, where we've got a little cup here and a handle and a move up, another cup here with a little handle and a move up, all within this bigger cup and handle. Really strong since the middle of February, moving up against trend support, with you see the RSI holding there firmly on the edge of technically overbought, but that's not a bad thing right there, moving sideways in that area. And the MACD moving sideways as well now, but in a strong position. If we measure from this an initial cup and handle starting in March of last year and down to the 1350 level, we've got 28 to 1350, so let's say $14 on top of the 32. So a price movement up to about $46, $47 leaves even more upside on this one as a defensive quotes stock to hold on to your value should the market continue to pull back further. So look beyond the utilities, look beyond the consumer staples when you're looking for defensive stocks in this current environment. That's your Daily 5. Thanks for watching.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.